connection. I had to so um back end like call it adjustment and all that, So the wires for the laptop just started entangling my shoes and my leg. I was wondering that what's going on. So I'm happy to be here, and I also want to thank Madam Aishat, and I think she was the one that brought it up, the first idea of having this conversation, and I'm happy to be here. And I don't know if I'm audible enough, anyways. So I need to find out that confirm. Can you confirm if I'm audible?
Yeah, we can hear you. We can hear you, sir.
All right, and the screen as well. Is it clear enough?
Yeah, we can see you.
Awesome, awesome, awesome.
Once you are ready to share your screen, please just let me know.
All right, just okay. Okay, so I think I will need permission to share my screen now. I'm ready.
Yeah, that's done already. So you can share. Go ahead.
Okay. Can you confirm if it's coming up? It should be coming up by now. Can anyone confirm if my screen is
Yes,
up?
I can see your screen.
Oh, beautiful, beautiful. All right, awesome. So I guess we can start.
Okay. Excuse me, sir.
Yeah. Yes, please.
I'm a bit receiving echoes. I don't know. My room.
Oh, I don't know. Let me just see what could be wrong.
But there are some echoes that I'm receiving this side.
I'm thinking that's from your end because it's clean at my end here.
The audio is fine from here, so you can see.
Okay. Okay, can we go ahead, or would you want to check from your end?
Okay.
Great. Okay, so I think we can just start. I'm hoping to have a very interesting time, and I'll try to make it as granular as possible because I understand that taxation can be boring. Most people switch off at some point. That I even hear people say things like, there are two people they don't like in this world, in this part of the world, the most: a taxman and a policeman. I don't know if that's true in your client though, so just said to put that out there. So managing taxes as an African freelancer, or for the African freelancer group. So that's just my topic, and I usually like to have some quotes just to spice up things a bit. You miss 100% of your shots, of the shots you don't take. So I mean, that's something that has really resonated with me all my time taking adventure. So it's something that I really appreciate and has been an inspiration to me in my journey in life. Okay, so what are we going to learn today? We're going to learn a couple of things about how tax obligations affect not just your freelance role, but also as a taxable person. I cannot hear the echo now. I can hear the echo. I just want to be sure. It's my audio perfect?
Yeah, it's good now. There was an echo before, but it's good now.
Oh, yeah, great. Now it's good.
Great. Okay, so let's go. Let's continue. Yeah, so I was saying that I have some key points that will guide us in this conversation. First off is your obligation, your tax obligations normally. Proper record keeping, that's the financial aspect of your work, your business. And then staying compliant, and then common mistakes that you can avoid, and pitfalls that you can avoid as a freelancer. So I also try to look at it from the African perspective because I understand that not just do we have Nigerians on this call, we have people from Uganda, probably Kenyan as well, Ghana and other neighboring countries in Africa. But just to give us a pep, I know we are aware that the world has changed. Not just is it's not more a global village, it's almost like an hamlet now. Like it's more knitted together, and from the click of a button, you could just be having a client somewhere in Bermuda, somewhere in the US, and then you're doing business without having to have a fiscal interference. Just no fiscal nexus as it were, but just have to have a kind of platform to do business, and then over the counter you have your transactions signed, sealed, and delivered. That's the future we are now, or that's the now we are now, not even a future thing again. The tax laws we had across the world did not emphasize such a change, so there was a struggle to meet up with all these dynamics. That's why the OECD, that's the Organization for Economic Cooperation, that's powered by the European Union, came up with a 15 points agenda called the BEPS Action Plans. And that BEPS Action Plan 1 dealt with effectively addressing the problems of taxing the digital economy. And so that's what we are having around the world now. When you're hearing things like Pillar 1 and 2 for multinational companies, but that's a different conversation for another day. Why I brought it here into context is just to make you know that it's the world that is now your playing field, not just your immediate country, as it were. Those are the four walls of the country, but the world now. So, in saying this, it means that you need to actually upskill and then relearn, unlearn, and then see how you can adapt to this dynamic and volatile environment to find ourselves in these days. Yeah, so as it affects freelancers, who is a taxable person? A taxable person is an individual or entity that carries, okay, let's look at it from the individual aspect first. It's someone that carries out economic activities that includes exploiting intangibles or tangible property for income, whether it's a trade, a business, or an agent of government acting in that capacity. So, not just are you the one into this thing, but you could actually employ an agent who could be doing it on your behalf. It could be a full agent or independent agent. That means not just is it servicing your needs or meeting your needs for a commission, he also has other people that is doing the same for a fee, of course. Yeah. So it means he earns income from the freelance work, writing, design, consulting, coding, and any service. So you as a taxable person would have to align with the tax laws as an obligation for you. I know this law also applies in countries in Uganda, Kenya, and other African countries as well. They have some way of accounting for taxable people, persons who are free into freelancing, as it were. Um, so what are the obligations, as it were? So using Nigeria and most West African countries, and even East African countries also, there has to be some point of registration. So you have to register with the tax authorities in Nigeria. Just before the new tax reforms, we used to have what we call the tax identification number. That's a thing, but has now been revised to the tax ID, and so that's the first point for registration. And I see that these things have been automated these days now, so it's much easier now than before. We also have tax returns filing, so filing obligations. If and the side is happens to still be a nine to five buyer, 9 to 5 person, you probably still have some pay as you earn obligations that your employers will probably help you handle at some point. But the more robust one will have to be your annual filing as a person. And it's at this point that there has to be a differentiation between your business profits and then your personal profit or personal income. Now, because I've worked as a taxman as well from the government perspective, it's easy for me to talk from the regulatory aspects and then from consulting, which is the compliance aspect as well. So it gives me a balanced view of how things are. Now, in going forward, these views are just my views. They are not the views of my firm, and then they can be used as a basis for taking an opinion on things. So it's just for learning and practical insights to help us with our tax obligations in our various countries. Now, so what are these tax types that might affect the freelancer on a whole, on a holistic approach? We have, I mentioned, income tax, where you have the business registered, and then depending on various turnover thresholds, It could be tax. A taxman is just principally key on three major things: profits, income, and gains. That's what it's concerned with. So they usually say that you pay tax out of profits. You know, So that's the taxman's perspective. And one other thing to also know is there's a difference between the accounting profit you see in your financials and then your taxable profits. And this is so because the accountants would have made use of depreciation, which can be different methods. You have the straight line, reducing balance, weighted average method, and all that. And it's also for stocks also. Maybe you're using a first in, first out approach for your inventory, and then you're using or you're even using a buffered method, the kind of weighted average method for your valuing your stock. These changes in your financial statements will have an impact on either you understate profits, accounting profits, or overstate accounting profits, which a taxman will be wary of. Because from the taxman's perspective, he just wants to see how much, as it were, ethically, how much the government can get from individuals, companies, and all to fund government expenditure. You know. Now, from the accountant, it's just documenting using a double entry to apply to those profits, and then maybe using a straight line method for depreciation. So I'm going back to the difference between an accounting profit and a tax profit. I spoke about depreciation and inventory management as well. So because there are those so many methods, and the fact that the taxman is wary of the various things a taxpayer or a company can do in understating and overstating profits to achieve a particular aim, they now said, you know what, you do your depreciation method in your accounting, your income statement, it's fine, an expense account. But me as a taxman, I'm going to start adjusting from the accounting profits to make what I call capital allowance, which is granted in lieu of depreciation. Now, the depreciation in lieu of depreciation means that capital allowance is a uniform amount that will be charged on your qualifying capital expenditure and assets that will be applied across board to all your assets for the useful lifetime. So that brings the balance between the various methods that will be used by an accountant. You know, I wish I can see myself. I feel like I'm just speaking, and at this point, I would like to stop a bit. I want to take one or two fillers in the room. Is it getting too technical? Do I need to calm down a bit, or do I need to slow down the pace? Yeah, I don't know if there are any takers yet.
Yeah. You're doing great, sir. Can we have one of the Menti questions now?
Yes, please. Yes.
Okay.
Let's pick it up from here. Yeah.
Okay. So everyone, I dropped a link in the chat box earlier. If you can't see it, just click the link. We're gonna have a Menti session now. Trying to.
Can I stop sharing? Would it help?
Yes, please. Okay. So I'm dropping the link again so that everyone can. Please just click the link now, so we can attend to the question. Or it's not too technical and it won't take your time. Okay, let me see. Can you make me the host, sir, so that I can?
Okay, that's fine. Let me see. So it says you are joining, so it's not even giving me the option to bring you as the host. Oh. So it's not even giving me the option to. It says you are joining, so I'm not even able to make you the host.
Okay, let me leave and join it.
Okay. Okay, good, beautiful,
Okay,
awesome.
thank you. I think I'm the host now. So
Yeah, great.
let me share my screen. Okay, can you see my screen?
Yes, we can.
Yeah, we
Okay,
can.
so all right, thank you. We are going to so just look at the on your phone. You should be able to join in once you have clicked the link that I shared. So once you have clicked the link, you can answer the question on the screen, on your screen. All right, I think I'm waiting for one more person, two people. Okay, so let's go to the next slide. One more question. If you're having any difficulties, you can just mention it. A little scary.
That's why we try to smile. You know, I mentioned it now. Policemen and taxmen are the most hated in the world. You could be that.
Yeah.
Nobody likes a taxman. In your mind, you're like, what have I done wrong this time? Oh God, what have I done to myself?
That's great. So we have one more question before we move on. So he has talked about um, who is taxable. And so now we can answer the question, which of these freelance activities do you learn from, or do you earn from, sorry? So let's see your answers. Rolling.
Wow, it's evenly balanced. If you ask me.
Yes,
Wow,
yes,
interesting, interesting.
it is. Okay, so we are going to continue with the presentation now.
Okay, so, okay,
Let
thank you
me
so much.
give the permission to share
Okay,
your
please.
screen. Sorry. So I was trying to make you share your screen without making you the host, but it looks like you have to be the host to share.
Oh, wow. Okay, maybe when I share, I'll just pass back the hosting rights so that you don't
Okay.
tax that one too. Okay, so once I share, I'll just
All right.
host this enabled attendance from shares. Okay.
Yes,
Um,
done.
okay, yeah. I think it's coming up. Please, can you confirm if my screen is up?
We're still waiting to see it.
Oh, okay. It should be up now. Is this still coming up?
Yes, your screen is up now.
Oh, beautiful. All right. So just one more thing. Let me make you the host again so that we can move on. Oh, okay. Let's just go ahead. Okay, I think we can go ahead. Yeah. All right. So we just defined who a taxable person is. So from the taxman's perspective, it's more from economic activity and
We're
whether
seeing the
it's
wrong screen.
tangible or intangible income that you get from those kind of jobs. We are getting paid. Those are
Mr. Oladimeji,
hello.
sorry, we are
Yes,
seeing the
please.
wrong screen. We are seeing your
Oh,
desktop. Yes, not your
oh my
presentation.
lord. Oh, I'm so sorry. Let me. Host is enabled and attendee from sharing screen. Oh, so I think you need to give me access again. So I can't share my screen until you give me permission. You're now the host.
They
Okay.
have done it. Yeah.
All right. Okay. Is it up now?
Still waiting. Let's give it a second.
Okay. It's not up yet. Well, I
No.
could be wrong. Mm, Okay. Stop sharing. Is it up yet?
Yeah, it's up now.
Oh, great. Okay, yeah. So we'll try to first create a kind of foundation to say who is, excuse me, who has their obligation to pay any form of taxes, and then we've established that once you're earning income, profits, or gains from your economic activity, then you're a taxable person, and it's your obligation to pay the appropriate fair share of taxes to the very appropriate relevant tax authorities within your jurisdiction. Yeah. So we also spoke about tax obligations at a glance. Most times, what we see is not just are you to file as it's where maybe Mr. Samuel, as Mr. Samuel now, you'll file, and then where you have your business as well too, you'll also file. So those are two different regimes as it's where. For your payee, your personal income, that one is for you as a person, and then your business income is for the business. So we always advise that there has to be a clear distinction between your personal income and expenses from your business income and expenses is fundamental because again the taxman is seeing some inflows in your personal accounts. You in pidgin in Lagos here we say you go explain tire, you really explain to him why I mean he shouldn't ask questions on where those monies are coming from. So you are saying that no, it's just stock and trade. Is someone wanted to buy me in a car and they sent it to my personal account. It's a red flag for the taxman because his own concern is just okay, fine. Let's say this inflow is in your bank statement. You need to explain to me what it's all about. So that's why it's always advisable that I think there's a precedent those days in accounting, they call it salmon versus salmon and all that. the difference between your personal, you as a person, and then your business. So entity concepts. So that's just, so there has to be a separation. So you need to make that distinction and then ensure that everything is well aligned with documents supporting both the business and then the person. Now, um, you might also, depending on the country you are, be chargeable to VAT or sales tax. In Lagos, Nigeria, not just do we have the Nigerian Revenue Service, it used to be the Federal Land Revenue Service in the past until last year, or becoming effective January this year. Most invoices you see when you buy stuffs in Lagos, for instance, you see where they will remove the 7%, 7.5 VAT rate charge, and then the sales tax, which goes to the Lagos Inland Revenue Service for invoices in Nigeria, in Lagos, Nigeria. Some other countries and some other states, they've abolished this tax, and then you probably just have the VAT, value of the tax. So depending on the country also, there will probably be different mechanisms and different tax rates, as well as different VAT-able goods and supplies that qualify to meet that narrative. So it's just for you to know what applies within your client and who is the relevant tax authorities to collect VAT. In Nigeria, it's the Nigerian Revenue Service that actually collects value-added taxes. While the sales tax goes to the states, in Lagos State, for instance, like some places we might call it county, so Lagos, local government. So in Lagos, Nigeria, the sales tax goes to the Lagos Tax Authority, which is the Lagos Inland Revenue Service, Lagos Internal Revenue Service. They're the ones that collect the sales tax. And there are also some transactions that are withholding in nature. Withholding tax is not really a tax per se, it's more of an advance payment of taxes. So it's not a different charge. It's just like a kind of credits that you get for paying your taxes. So you can actually use those credit notes for your future income tax obligations. Let's say you've done business with, have a contract, and then you're giving your credit notes of say 200 naira, $200. And then for your income, for your business, you have income of 500, and then your tax liability is $300. You could actually bring those withholding credit notes instead of paying cash as paying part of that tax liability on your business. So that's how the credit note works, you know. So we'll probably get into this one as we go on with this conversation. Mr. Samuel, just let me know when is a good time to pause for questions so that we don't get it all bored. And then people can also catch their breath to ask questions as we go along. So you can just
All right.
nudge me when you feel that we need to slow
Okay,
down. And
I'll
I
send
want
you a
it to be as
message.
interactive as, okay, please. So it's as
Yes.
interactive as possible. It's not just
Okay.
for me to be talking, but to get the feelers in the room and to be sure that we're getting the fundamentals. So I'll appreciate that a lot. So yeah, thank you. Thanks for that thumbs up. That's quite encouraging and comforting. Yeah. Okay, so the last part to bit, and Madam Maisha actually mentioned this when we're having the conversation, and I feel that to be interesting to talk about it because, like I mentioned, the kind of work it's the future of work, if you ask me, and then it's across borders, if I can use that word. So you can have clients in New York, clients in Dubai, Kuwait, Austria, and all that, you know. So, and I'm in Uganda, I'm in Kenya, I'm in Ghana, I'm in South Africa. What do I need to do? And I know that I understand you probably don't want to be caught at the other side of the law. So I wonder what's the right thing to be sure that I'm being treated fully equitable, and at the same time I'm not being non-compliant with the tax rules in my country. So that's where this international income comes in. Now, for instance, if I use Nigeria as a case study, if you I've had clients that they are based and resident in Nigeria, but they have clients in other countries, and those are the guys that they bill and they send their money to Nigeria. Now, at that point in time, that income getting into Nigeria, because of the point of residency where they wake up and sleep every day, that already attracts them. It's like force of attraction to be liable to tax in Nigeria. So it doesn't now matter because my enter income from abroad, but you reside in Nigeria as it were. Then, to the extent of your residency in Nigeria, those foreign incomes will be taxed in Nigeria. That's what applies in Nigeria. Other countries too have their own different regimes, but something close and similar, you know, based on that and how you can do. And I know that the new Nigerian tax new laws also has allowed it that you need to even prepare returns for those non-resident or those international incomes that you're getting, and then file to the non-resident tax person's office for the non-residents as well as for that foreign income, so that they can have an holistic view of what is coming in and then attribute appropriately. So that's how it works. Now, registration, income, and taxes. So registration with tax authorities, most African countries require freelancers to register with their national or local tax authority, even if it's you operate as an individual. I try to explain that there has to be in Nigeria, for instance, a distinction as you as a person and then as a business, which requires different filing obligations. One other thing I also need to mention is that there's a difference between filing and tax payments. There are a lot of incentives for businesses based on thresholds that will determine if you are to pay tax. But most times you might be exempt from paying some taxes based on your revenue threshold, but it doesn't presuppose that you will not file. So what that means is, for instance, for 3 months nothing came in. I'm just looking at it from if you are a vatable supplier or goods, if your services are vatable, you can charge a VAT on that service. If it's a new VAT for the month of March, nothing came in that month, you will still file a new VAT returns based on those thresholds. But I mean, it's just filing. Now, if you don't file that new VAT, the taxman is wondering that what if it's a lie? There's no documentary evidence. That means they might probably be doing some business. So you need to see that new filing. So, and that form it will be 000, but you are filed. But you won't pay a dime based on those thresholds. In Nigeria now, they've been totally exempted. I think if it's for a small company below 100 million, and if you have a total assets of about 250 million in naira, then you're exempt of all form of this payment in Nigeria. And excuse me, and I know there are also different rules, different rules as it applies to your country. So that's just for us to note. Um, Required before filing returns are not. And I also say that because of the way the world is going, there's a lot of digital transformation. And so there are a lot of revenue services trying to automate their systems, making use of algorithms and um, analytics to try to have a demography of the taxpayers and know what should be their fair share of payments of taxes. So this is quite helping. Hopefully, when they have enough data around this, to help to really market segments to know what you ought to pay. That's for us to know. Now, income obligations as well as the income, their expenses. Normally, in senior clients, where you have expenses that are more than your income, sometimes some countries like Canada Revenue Authorities, they give you kind of refund for some period of low business activity or all their losses. But in Nigeria, it doesn't really apply yet. Maybe in future it may happen, but I can tell you that it doesn't. I don't know why African tax authorities find it difficult to do this reform thing. But for now, but hopefully because of the way things are going, I mean, if you can tax my income, why can't you tax the poverty too? In quotes, why would you just be on income, not the revenue, not cost also? If it's incurring costs, maybe for some social amenities or from maybe for instance power cuts, business environments not being friendly at the point, you should also, as a tax authority, there should be ways of compensating the taxpayer for those periods, especially if the taxpayer is compliant. So these are conversations that will be good to have public opinion on with the tax authorities and tax policymakers in future and in the now as it were. So allowable business expenses could reduce your taxable income as well and all that. Yeah. So the next slide, filing obligations and then VAT.
Can we take a few
I
questions?
mentioned VAT before.
Hello, sir.
Hello.
Yeah, can you hear me? I said, can we take a few questions now?
Yes, please. Let's do that. I just speak that from your face, and I just felt there was a need to pause here. So let's go ahead. Yeah, please go ahead, please.
Okay. Do we have any questions? Anybody with any questions at this point? If there's anything you need to clarify before we move ahead, please let's ask. Or maybe Mr. Oladimeji will ask us a question.
Yeah, I love that.
Yes.
I'm already cleaning my hands together, Yeah, no.
So if there are no questions, then you can ask us a question, just to be sure that we are all following. Okay, so
Okay,
let me Yeah, you can go ahead and ask a question, sir.
Okay, yeah. So just a question. I want to find out. So as a freelancer, do you think you are liable to tax in your country? Is it about being a freelancer or being a taxable person? Who would want to? I would like to have takers. What brings you to tax payments? Is it the fact that you are into freelancer business or you are a taxable person in that country? There are no wrong answers. Oh. Nobody will be flogged. Actually, there's no emoji for Kane and all that now, so we're all safe. So I want to hear takers. What do you think? What brings you to the tax net? Is it the fact that you're into a business? It could be both, it could be one. Or is it the fact that you are taxable? Any takers? Okay, let me answer the question. I asked the person to answer it. So, taxable person, yes. So, because you are taxable, regardless of what you do, already brings you to the tax net. So, whether it's freelancing, consulting, accountant, engineer, the fact that you're into business on the surface already, you're a taxable person. Except the tax laws in your countries now say that, okay, there's a exemption that, okay, freelancers, those with this threshold of turnover are exempt, except otherwise stated. You are all having that obligation to what, to pay on file taxes. Why for me now?
Interesting.
Just joking. No, thanks. Yeah.
There's
Okay, so
there's there's a
let's
question for you in
beautiful.
the chat box.
Okay, please. You know I can see the chat box, so maybe you
Oh,
want to help
okay.
me to read
It
it.
says this from Aisha. It says, how do we avoid double taxation?
Okay, that's a good question. Okay. All right. So let me just go straight to it. Yeah, so double taxation is actually an international scheme to protect the taxpayer as its way. But it has rules also because we see that taxpayers are very smart and multinationals are very smart. So, okay, let me just give you the perspective of a multinational before I go to the individual. Most multinational companies, they go across countries creating branches and offices around jurisdictions. So let's say we have global freelancer group headquartered in Bermuda. They now want to set up an office in Africa, in West Africa, and one in East Africa. They will do what they call an effective tax rate analysis to see who is liable to taxes within those two regimes. Okay. So they will now say, okay, in Nigeria, the tax rate, effective tax rate is 32%. In Ghana, it is 20%. In Uganda, it is 15%. The goal of the multinational from their decision making aspect is to what minimize tax payments across various jurisdictions. Okay, why the tax man is everybody must pay the fair share of taxes wherever they operate in our country. You must pay taxes some form. So there's always a battle of taxing rights among different countries, both for the taxpayer and then for the multinational. Now, to answer Aisha's question is to look at it that okay, fine, double taxation. It's a relief that okay, I've been taxed. I had a business. I'm a Nigerian. I had business with someone in Uganda and they paid me $200, but I'm a Nigerian resident. If there's a double tax agreement between Nigeria and Uganda, then there'll be a lower tax rate to ensure that you don't suffer double taxation. But the twist is that why we have to have this relief is that there's always such a thing called double non-taxation also. People are very smart. So they will not pay in both jurisdictions and they are thriving. So that relief, that agreement, double tax agreement, is the one that will spell out the taxes covered, the persons covered, the rates that they might have minimum tax. So what we see is that, for instance, if you have suffered a tax from the Uganda tax authority for that income you earned in Uganda, for instance, if we have that double treaty agreement, the income coming to Aisha in Nigeria when she's declaring, it will not suffer twice. That amount will be removed to prevent you from having that income suffering tax twice. But if there is no double tax agreements, then you need to have that conversation with tax authorities. Like you need to really have documentation to say that this is what I suffered here. So you can't pay tax twice. It's not a good thing. It's against the canon of taxation, a good tax system. There has to be fairness and equity. So that's just I don't hope that's quite helpful. I hope that's quite helpful for you. So the
Yes.
point is
So
the concept is first
sorry,
off,
I wanted to ask a follow-up
you shouldn't
question. Can you
suffer
hear me?
double taxation on the same profit, on the same tax base. It shouldn't happen. And even if it happens, you have the right for a refund or to call it out.
I think he's trying to ask a further question.
Oh, okay.
Yeah, so you can go ahead.
Can you hear me? Can you hear
Yes,
me?
Yes, we can
please.
hear you.
I can hear you
Okay, so
clearly.
all right. So I was going to find out. So that means we'll just choose the jurisdiction that we'll file under. That's it, right?
Yes, that's for Aisha. Yes, for Aisha,
Yes.
that's what you do. Yes, exactly. So
Okay.
that foreign
All right.
income, normally most times the Uganda Revenue Authority might have a way of finding out that may not be able to hold you liable for your taxes because you are non-resident in Uganda, in my example. So the person you are doing business might have the a self-charging obligation from his own hand to declare that income that is paying to you. So it might pay you net. That means if your income, if it's charging you $1,000, I'm just using that hypothetically, you're getting that income from someone in Uganda. Let's say the tax rate is 10%. It might pay you $900. That's net. He has removed the 10,000. So when you're coming to Nigeria, you are telling them you have suffered that percentage from your dealings with a client in Uganda. So, hello, I can't be charged further. So they will now look at that situation. It's always on a case by case basis. If there's an agreement between the two countries, then they will either reduce the rate or make sure you're not taxed twice. But if there's no agreement, then they have to have a kind of conversation to show documentary evidence, and then you'll be given a sort of refund. Yeah.
Okay,
Thank you.
thank you so much. There's one more question for you.
Yes, please.
Uh,
Yeah.
it says, is there a difference? This is from Bill. Is there a difference between paying taxes as a freelancer without a company and a freelancer who has a registered company?
That's a beautiful question. Yeah. So, as a freelancer, that's the person now. It's an individual. That income, the question you ask is when the income is to be paid for the purpose of a tax man, where is it being paid to? Is it paid to, again, let me use Mr. Samuel as my case study. I don't know why I keep, because I'm seeing your face on my screen. So I use Mr. Samuel as the freelancer now as an individual. So it's the one. So if he's getting that client and it's paying to him, then it's now Mr. Samuel that has that obligation to pay that tax. But if it's Mr. Samuel Incorporated that is getting that income into, that's the business side of it, then you're going to pay based on the tax rates and the appropriate appropriate mechanism used for charging the business person. So it's two different things, just depending on who is getting the money. So if I get the job as a freelancer, as an individual, then that means when I'm declaring my personal income tax as Mr. Samuel, that income is in that bucket. So it will be taxed in that bucket. But if it's as Samuel Incorporated, it's in the business bucket. So I'm paying according to income tax. So that means it will be chargeable to income tax payments for the company and for the individual to the personal income taxes. So for the personal income tax, another twist could be that if you also have a 9 to 5, you do your pay parts, which your employer will do on your behalf, like it's the case in Nigeria, and then other incomes, you declare that freelance income to be subject to tax as an individual.
Thank you so much. Bill, does that answer your question? You can just drop an emoji.
Yeah, but but
There,
but, but a caveat, sorry, Mr. Samuel. So I'm basing it mostly on what I see because I have vast experience in Nigeria situation and probably UK or a bit of US. But for other African countries, it's something similar. So you might want to seek consults just to be sure that it could actually be exempted from filing in Uganda. It depends on your rule. But most times, I doubt if they will. They'll probably put you under the bucket of a sole proprietor or an individual to still say that you have to pay something. So it's still based on country by country practice. Yeah.
okay, thank you, sir. Anolu Akpo, you're raising up. So you can go ahead and speak now.
Yes. Good morning. Can you hear me?
Good morning. Yeah, we can hear you.
Yes. So the question is almost similar to the last person. So the question is that so the last person asked if there was a difference between being an individual freelancer and if you are operating as a business and you are a freelancer as well. So my question now is that so if you get paid, like you get paid directly into, for instance, let me use myself as an example. So the way I work is that when I get paid, I send it into a fintech app that I use, and then I use the fintech app to transfer it into my business account. Then from that business account, I send to myself, like for the parts that I want to have personally outside of the business. So how does that work? So how do you now file for that business that the money enters directly into and then comes to me? Like a part of it then comes to me. So how do I file that? Because it's a bit confusing for me.
All right. Yeah. Thank you, Mr. Anolu. Mr. Anolu Akpo. Yeah. So what I hear you here, just to clarify that to be sure that I got your question. The money comes into your business account first, or via the app, or use the app to now transfer to your personal account. Is that it? You're muted.
Yeah. So the money comes into the fintech app.
Okay.
I transfer it from the freelancing site to the business app. To the fintech app. Then from the fintech app, I now send it to. It comes in as dollar. Then I now transfer it as naira to the business account. It's from that business account I now send to my own personal account.
Okay. So it's quite complicated because of the movements. But the question to ask yourself is that the business I did now, did I get it as Anoluwapa, or did I get it as Anolupa Ventures, as it were? So whether it's a business or as an individual, that's the question we need to ask. If you get it as the individual, then it's personal income obligations is what you need. So all those transfers, where you declare that income will be for Mr. Anu's personal income obligations is where you have that income seated. So you probably have to have bank statements and all that to show that it's an inflow for you as a person. But if the business is gotten as a business now, that means you registered a business for that particular kind of job, then that's a business income. So it will be subject to in Nigeria as it was now, it will be subject to income tax. But there are a lot of waivers, so you probably just do filing if you've not met a threshold. So it's just the filing obligation that you are doing. You are not going to pay anything on it. So you just file, but you won't pay, except if you meet that threshold. I explained that it's 100 million and total assets about 250 million naira. If you don't fall into that category, you're a small company.
So another question.
Yes.
So the follow-up question is just that. So I get what you're saying. So now you see that I don't want to ask too many questions so it doesn't get scattered. So what I hear you say now is that if it's personal, like if I got the business name as a personal whatever, then it's going to be seated as a PIT. But personal I'm saying that
yes.
Yeah. So but the business name, like it's a business name. So I actually registered a business name.
Business name, okay, good. Okay,
yes.
So that's enterprise, yeah. So that one it's a business. It's not you.
So is it going to be treated as a business tax?
Yes, that's business tax. It's not as Mr. Anuna.
So what of those ones I'm transferring to myself?
So when you say you are transferring to yourself, is it like kind of income to yourself, or is it part of that income? Is it like a kind of salary, as it were, to your personal account, or the full amount?
Yes, like salary kind of.
That one is. Yeah, if it's salary, if it's like a kind of your own salary from that business income, then that's now Mr. Anu's obligation as Mr. Anu now, not as a business name. So that will be personal income tax obligation for you. So you do that, you declare that one as part of your personal income and pay the appropriate tax on that. So the business name one.
So what it means is that I'll be filing two.
Yes, you'll be filing, yes, to the extent of the fact that you have to pay yourself, that will form part of your personal income obligation filing as Mr. Anu. But for the business name itself now, you have to align, you have to match those incomes to that one. So you also be so you're filing two in all. That's what I'm just saying. You're filing two returns.
Okay.
Yeah.
Thank you.
Yeah, you're welcome.
Okay. Thank you, sir. So one more question. Oluwamuyiwa question says, so is this tax at the end of the year? And what if the money someone gets billed for isn't available in their account? For example, since it wasn't taxed when the account had funds, what will someone do?
Please, can you get it again slowly?
Okay,
This one
so
is not consulting now.
I'll go through slowly now. So, is the tax at the end of the year? And what if the money someone gets billed for isn't available in their account at the time when they are taxed? What will the person do?
Okay, yeah. So, that's a tricky one too. But I know for tax, timing is the essence. Everything has time and deadlines and compliance obligations, and even penalties for non-compliance. So for personal income tax, basically it's a whole calendar year, government year, 1 to January to December as it were. So the ones you are filing in Nigeria that is due on 31st of March, annual returns, is for January 1st, 2025 to 31st December 2025. That's the one you're filing before 31st or 31st for Nigeria to the LRS if you're in Lagos, and Ogun State if you're in Ogun State, and FCT IRS in Abuja if you are there. Now, the one about the money not hitting your accounts, but you had the invoice for it, from the aspect of the tax man, you probably just want to find evidence. Whereas I was maybe the have payment cycle in the company, and then the cutoff date falls between 2 years. Maybe for instance, it's a 3 month cycle, and then you did the job in November and it's coming in January. You know that has already lapsed 2 periods, as it were. So you probably would not be able to report that income in there. So it's just to explain to the tax man. I mean the difference. The goal is that the taxman doesn't want to feel that it's being shortchanged or that you're trying to evade. That's just the intention. Because once he feels that it's being billed and they are not getting the money, he's thinking that this guy is using government money to trade. So it might be a trigger for him to want to do a full blown audit for that, depending on the quantum of amount of money involved. Otherwise, they probably look away because in canons of taxation, there's a cost benefit analysis. If the money I'm using to purchase to pursue the amount, it's minimal. I'm spending more administration than collection, then there's a problem, you know. So I hope that's quite helpful. So it's just the timing is to explain. It's more of explaining and having documentary evidence. This is I've been invoiced my claim this money, but for some reasons I've not been invoiced. I've been invoiced, but I've not gotten the cash. So this is how do I report it? You report, you match revenue with expenses for the period. Is either the money has come or it hasn't come. However, where you will incur expenses, it's better to report that expenses than to wait for when you actually enjoy that benefits. I don't know if you get what I'm saying.
Okay, thank you, sir. So Olumwa Muyiwa, you can just drop an emoji. I know that I said that was the last question, but someone has a question. It says, I get paid through an app my company uses. I only withdraw the amount I need from the app to my bank account. Will I be taxed based only on my income?
So the question is that the app that pays you, are they technically your employers?
Yeah, according
Or
to
is
the
it that
question.
you are doing business for them to which you are being paid for? So the what will help us is just know first for any transaction I'm having or any service I'm rendering, is it in my name as who asked the question? Okay,
Um, Oluwa.
okay, okay. Ore Oluwa asked the question. Good. So am I getting that business in as Mr. Oluwa? Oh, so I don't know, could be Mr. or Mrs. Apologies. Am I getting that Oluwa? Or am I getting that income from a service I've rendered as a business? That's just the distinction. If it's as Oluwa, that money is subject to personal income tax obligations and filing. So the movement of the application and all that is fine. That's the transaction. That's the method of transfer. That's fine. But the question to ask fundamentally is, how am I getting that job for? Am I getting that job as a registered business entity or as Oreoluwa? If it's as Oreoluwa, it's personal income aspect of the tax that applies to you. If it's as a business, then it's the business income tax that applies to that income. So you find that under the business income. But again, there's a lot of incentives, like I mentioned, that it depends on some certain thresholds. If you don't climb to those thresholds, you probably just have to file, and then it's the revenue authorities are encouraging what we call voluntary self-assessment regime and tax compliance. That's to say that, in fact, at this point, we're probably not even keen on the accuracy of what you're submitting. Just submit. And the aim is just to get more people to the tax net for now. Then maybe in future, excuse me, they might come for now auditing those amounts so that they want to see that we didn't cook anything there. Yeah.
Thank you so much. So we can go ahead with the slides now.
It's almost tempting to feel that have I not forgotten the topic? So okay, so let's go ahead. I think I will require access to share. I'm not sure if it's still on me.
It's still on. You can still share.
Oh, okay.
Yes.
All right. Great. What am I saying? New share. I don't think I can share.
Your screen was already shared before.
Oh, so I just complicated it. Let me see. Okay, just let me confirm once it's up.
Okay.
It's still not up?
Not yet.
Okay. Please just let me know once it's up.
All right.
Could it be network?
Probably not.
Oh, I think, is it on now? I'm seeing a thumbs up. I'm presuming that means it's up.
I don't think I
It's not
can't
up
see.
yet. Okay,
No.
I'll probably have to close and open again. I don't know
Okay.
what's going on. Um, it should come up now.
Yes, it's up now.
Yeah, so one more bit to mention. Since Aisha, why I keep calling her this? God have mercy on me. Yeah, so let me speak a bit about withholding taxes also. Just something you need to know. Like I mentioned before, it's not a tax type. It's an advanced payment of income tax, and most clients give you a kind of credit note, a kind of a note to show that you suffer this withholding. So if you do business with government, for instance, now you do a freelance, you got a freelance gig with the Ghanaian government, and they're paying you $100 million. So when they're getting that money, you probably know what I'm talking about. So they will give you, if the rates on that services, and let's say it's a service that has to do with consulting. When they're paying you the $100 million, it won't be that 100 million you get. You get like maybe, let's say it's 10% again, you get 900 million as a net. So they say net of withholding taxes. So you suffer that 10%. And then when you're doing your personal income taxes, I'm trying not to complicate this thing. There's what we call frank investment income. That portion that you suffered, you can't suffer it again under your personal income declaration. So you have to put that part that, look, oh, I had this gig with the Ghanaian government, and this is what I came in, and this I was paid net and all that. That's how the withholding works. And the same way dividend certificate also works. Most times, if you are into stocks, when you get your dividend certificates, you see that there's a net on withholding also, maybe 5%, maybe 2.5% as it were. and then that's what you pay net of that amount based on your dividend that will be declared. Because dividend is out of profit, so you can't suffer it twice, technically. Yeah. So the last part I will now mention also is um ah, that will skip my mind. So when it comes back, I'll just continue. Let's just go on. So these are the obligations, not typically for a freelancer. You have annual returns filing, income tax filing and payments. That's if you have a business name or you have incorporated a company, so you do that through filing, and they have different due dates for filing. So depending on your year end, typically most times, if your year end is December, January to December for income tax filing, the law gives you 6 months to prepare and file your accounts. That's till 31st of January of June for a December year end. For annual filings, if you are a 9 to 5, your payee, if that's your only source of income, by January of that year, your employer ought to have filed it on your behalf. So it's technically not your issue. The accountants in your 9 to 5 job should have done that filing on your behalf before the year end, before the due dates. Now, for personal income obligations, that's annual tax filing. That's the one that you have to do as a person now. That one will include not just your pay, your 9 to 5 as it were typically, your income from a freelance income as a person, that's Mr. Samuel as it were. That day you got, that's to be declared there. You have passive income, maybe you're a public speaker, you do lecturing and teaching, you're a musician, that income comes in within the year, it will also be declared and put as part of your income tax. And that's the bit between the difference between the annual returns filing and the personal income tax filing. Value added is based on some taxable supplies of goods and services. It's a value added tax, they must take tax. The burden of value added tax is not on you as a freelancer, it's on the person enjoying the service. So that's why it's called a multi-stage tax. So I walk up to an issue to eat there and they charge me because it's value added on the good. For instance, I buy bottled water that's processed already. It's not the water from the stream or from the well. It's processed. Something has been added to it. The rate is 7.5%. I will be paid. I'll be charged on that amount. It's not me as a seller that will charge it. It's the final consumer that will suffer that charge. And it actually has an input and output mechanism, but I don't want to go to the complexities. We probably have to see me after this if you really want more explanation. Because if you suffer input VAT on some of the services multi-staged, you should also enjoy some incentives that will say that, okay, I suffer this amount of input VAT. So when I'm not going to the output aspect, I should be able to net off that sales and purchases VAT on that transaction. This one actually happens mostly with equipment. If you import an equipment, for instance, the VAT on that equipment, you suffer an equal VAT on it. So when I'm now trying to file, maybe at some point of reselling, as it were, there has to be some obligations to say that, okay, you suffer this amount trying to import this amount, and this is the implication. So it's input and output. Stamp duties are on basically instruments. So as a freelancer, because it's probably something that has to be well documented, you want to tender an agreement in courts, something that will be admissible in courts, whether it's a fixed or an ad valorem instruments, assignment of deeds, and deed of assignments, and tenement agreement, loan agreements. For it to be admissible in the court, it has to be affixed a stamp. So that's why we have the stamp duties. In the olden days, it used to be a percentage like 10 kobo and other, but with the new tax act, it has been revamped to a more reasonable amount per instrument. So something we can talk about outside this call as well. But for it's not really pronounced and it's quite not material when you look at the quantum of amounts involved for those duties. Non-resident obligations. This is for when you are, for instance, I explained to you that if you had a business, you got a gig from India, from Uganda or India, and you are based in Ghana or Nigeria, that income you got from that gig, from the service you rendered, doesn't you as the owner of that job rendering that service, you are not a Ugandan as it were, you are not a Ghanaian. So the duty of deduction rises with the person doing the business with you. So it's on them to do that self-charge on behalf of the tax authorities in their country and then do the appropriate filing and payments. So that's the one of non-resident obligations. However, if you're a Nigerian also and you have business, you're getting incomes from other countries like that, the duty also, because at some point, for some reasons, if the Nigerian authorities don't know the non-resident, they will hold you as a person they know it as a Nigerian to do the self-charge, to do the self-charge on that income. But these days, with the new Tax Amendment Act, what you see is they now oblige even the non-residents that do business in Nigeria to register with the tax authorities. That's what operates in Nigeria now. Yeah. So the other bits will also be on financial records to be kept, and it's quite straightforward. The world has changed now, so and thank God we have apps now that helps us with generating some of these statements. Your all invoices issued to clients has to be well documented. That's a form of income. You have receipts of payments received, bank statements, and all that. Records of other incomes, royalties, and ads revenues as well. Commissions received, affiliate commissions, all those things are your income. Line by line, you put them in an income statement, and then you try to have agreements, maybe contract agreements, that this is what I'll get for this service I render. You make them documented. It can be in a file or a folder, or you could save on clouds. Also, you have to have expense record as well, diesel expenses, transportation expenses, every business that is related to that business, every expense that is related to that business. Sometimes these days we don't have reasonability now because of other issues that we may have. I know in those days we used to be wholly and exclusively for that business. So reasonability is also relative sometimes too in trying to find out what the expenses. Yeah, so that's the bits on expenses, home office expenses, software and tools subscription. All those things will form part of your expenses. Mileage log, where appropriate, you can also put it also. But what the tax man is just wary of is just trying to model everything up. And once they are single entries or they are not well documented entries, it's already a trigger for a full-blown tax audits, whether you're an individual or you're a business. But again, I always say that most times, technically, it's not even for the medium-sized taxpayers. It's for those guys that are high network individuals, but they are not paying any form of taxes. So the goal is to get them into the tax nets as much as possible through voluntary compliance before they now try to do a form of compliance check, regulatory check that will make them go for probably a full-blown audit that might bring about additional assessments if need be. But it's not compulsory that they have additional assessments. So from the side of a freelancer, things you need to have bank statements, client agreements where appropriate. It doesn't have to be well detailed as it were, but it has to be documented to say that I have this agreement with this person, and this is how it's supposed to be. This is what binds us together. This is the fee charge. This is the tenure. And if there's going to be an addendum to that, it has to be well documented, to put on clouds, put on folders, software. Just make it documented, and that helps a lot. So that in case questions are asked, you have a basis to defend your position. Typically, there used to be status of limitation for the period that you can hold books as for statutory audits. But I see that with the tax law now, there's even a limit to that. So to say that if you stayed for a couple of years, but there's willful default, there's fear that there might be other declaration or there's a criminal allegation against the individual or the company or the business as it were, then it might expose and then bring to force the fact that the limitation of benefits or the status of limitation will not hold at that point in time. But most times, on the average, probably have 5 to 6 years to just keep those books on record. And it can be a form of defense to say that if they're coming after that scoping period, they can't touch those years because they are already status bar. Yeah. So one other thing again is tools. It's your area, and thank God for the kind of times we are now. There are a lot of softwares, medium-sized softwares that can be very helpful to help you in your field, and tools to help you keep records. And then speaking about it from the accounting perspective, there's a new set of accounting standards that are coming up now. It's called it's a convergence. It used to be international financial reporting standards, but there's a push now that the non-accountants are now the major users of this information. So we need to make it as friendly and end user friendly as possible. So that's how those days of, I don't know if any of you know about Dreamweaver. It's probably Java and all these softwares, that all this web designing stuff. Don't mind me, in my past life I used to do some of this small website programming. You see that for Dreamweaver, you notice that there's a part that you have the layouts and the frameworks. But you also notice that sometimes you just run the layout and the graph and the kind of style you want on that web page. At the back end, there's a source back end that creates the codes for you. It runs on those codes. So if you want to adjust, you go to the code view, or is that what it's called now? The code view, and then adjust appropriately and to reflect on the frames. So you could be seeing the normal work as it should come out, but the back end, there are those codes that are running it. So that's how it works now these days now. So you have some of these softwares that you just need to input some parameters and some key data points, and then you see that at the back end you have an income statement, a balance sheet, or statement of financial position, and then even a cash flow statement can be generated by those apps, which makes your work easy. So it's not like those days that you have to be an accountant or you have to employ an accountant for a small size business that is starting up or not still trying to scale. You may not be able to afford a big accountant to keep your books. So you need to find leverage on technology a lot. But the important thing is that the technology is serving you well, and the subscription is quite low and is not becoming a burden that is even eating all the profits or all the business expenses. And then you need to make sure that they are well documented, and at that point it helps a lot. So you could leverage on some of these tools to help you with your recording of data. Yeah, so this I'll just leave this one also. I think it's quite very important, claiming deductions also. So, like I was saying, if they are coming for your income, profit, and gains also, they should also be able to give you some leverage to say that I suffered this expense, so it's not really my fault. Can I have a refund or a claim on this expense? So it's possible with some tax authorities, but I've never really seen it in Nigeria. What I see is a kind of leverage or a grant or incentive even before, like to say that it's not as if they will give you a cash back, as it were. They'll probably give you an incentive-based benefit, like something called benefit in kind of incentive. So that means, like now in the new tax amendment act, what we see is that, for instance, if your landlord increases your rent to a certain amount, you could claim as much as 500,000 of that rent as a kind of incentive. They will not give you cash, but when you are preparing your tax position, you will get that relief of that 500 if you can prove the receipt of payments. You have your rent agreement, because the tax man knows that these days people are very smart, and everybody wants to find if a will is just cheating government and all that, and it's understandable because they feel that I'm not supporting bad behavior. I'm just saying that when you don't even see what the money is being used for, you want to argue that, okay, who cares? But the right thing to do, the ethical thing to do, is to make sure that indeed, if I've suffered this amount of increment for this period of this accounting period, this is how much I should get as an incentive, and this is how much I can claim from this period. I feel my mouth is paining me. I don't know if you want to take some few questions before we move on.
Yeah, I was just about to nudge you. There's a question in the box from Kudirat. It says, please, I'd like some clarification. I run a small business in Lagos, and I've been filing my taxes with the Federal Inland Revenue Service instead of the Lagos State Internal Revenue Service. I want to confirm if this is the correct approach for my type of business. That's question one. So I don't know if you want to treat that before I go to question two.
Let me choose this first so I don't forget it. So
Yeah.
So that's a good question. So the question is, what we'll just ask you, the good things in Nigeria, I have quite an experience on that. So when you register your incorporation, is it as a business name or a limited company? If it's a business name, then it's an enterprise. So you probably should file to if it's in Lagos, because of residency, it should be the Lagos Inland Internal Revenue Service, LRS, in Lagos. But if it's a limited company, then the right thing is the Federal Inland Revenue Service, because they're the one charged with they're charged with assessing, collecting, accounting for all federal government taxes, to which limited companies and PLCs fall into that category. So that's just the response. So if it's a business name, it's an enterprise. So it's the LRS that would collect or take those you file that returns to. But if it's a limited company or PLC, public and private limited liability company, then it's to the Federal Inland Revenue, now the Nigerian Revenue Service. Yeah.
Thank you, sir. So the second question is, also, my business revenue is quite low at the moment. Some months we don't even make up to 500,000 naira. Am I still required to file taxes regularly despite this? And should I be filing monthly returns simply because I have a tax identification number with FIRS when income is minimal?
Okay, now so that's a tricky one too. So I don't really have all the answers, but from what I hear you say, normally you just need to ask yourself, what's did I meet the threshold? I try to explain what a small company is as it were. Small company, their income tax payment is 0%. That's from 100 million naira in Nigeria, and total assets of about 250 million. So if you meet those two criteria, you're a small company. The turnover 100 million naira. So if you are within below that threshold, then your income tax payment is zero. However, you might still have to file if it's a limited company. You have to file, but zero taxes. Now, when it comes to VAT, it's a different conversation for VAT because VAT is a monthly thing. So for months that there are no transactions, which it could happen, then you still have the obligation to file. But that one as well too, there's no charge. It's just to file. But what I'm understanding is that we're expecting further clearance or further circulars from the Nigerian Revenue Service to give us a bit of clarity on how this will work. Because there's also been the argument that if it's already a small company, why do I still have to have that burden of filing every month when it's already incentivized to say that it's 0% for filing? So there's no business. Why will I be incurring cost of filing? But I understand that it's well automated now. And but I also understand that there's even a new tax promax. It's called tax 360 something. It's a new solution that is going to be incorporated to the revenue service in a few months coming. I understand that the pilot testing is already going on in Abuja now. So within the next few months, we'll have that one that is more encompassing than even tax promax. So to answer your question, it's just the basics. Do I meet the threshold? If I don't meet it, I don't have that obligation to pay taxes, but I might have to still file for VAT especially.
Thank you, sir. I don't know if that answers your question, Kudrat. Okay. Anybody with any other questions, you can raise your hand if you want to speak, or drop it in the chat box. Okay. All right. You can go ahead, sir.
All right. Thank you. Okay. So key tips for smarter record keeping. I think we already addressed this. I'll just leave it at that way. I think, okay, how to stay compliant to avoid penalties. I think this one is also quite explanatory. It's just for us to know our obligations. But so the tax law kept using a phrase that with or without them nudging you, you ought to do the right thing by bringing up yourself for registration. So don't wait for them to start flogging you with cane to say come out and file. You should go. You should even render yourself and go online. I think it's now automated to do the regular and the regularization. That means just open up, create the accounts, generate your taxpayer ID, and then do the regular filings. And one other good thing is that one of the website has what we call the tax calculator that will give you an idea of what your tax liabilities will be. So the argument has been, for instance, for the Peter is that so when I do this filing now, does it mean that the system will generate tax payable for me, or is it just a voluntary compliance thing? So that also we're still waiting for the tax authorities to clarify what they hope to achieve. Is it just to get people to the tax net to comply, or is it just to slam them once you put in those information in the tax field of the website? Bam, your tax, dear taxpayer, this is your demand notes. Just saying those things. See why they don't like a tax man. So that's just what we see these days, and then so that's what we see these days. So just know you should register, and then know if you are registering as a business name, know the appropriate channel to do that. And if it's as an individual also, I explain as a taxable person, you have that obligation. So you register as an individual also. Then file and pay on time is very key to avoid late payments and attract interest, because when you hold on to government money, it is assumed as if you are an entrepreneur and you're using those monies to do other business. So they try to compound the interest and penalties with the spread of the CBN interest rate and then an added spread. So it's good to be wary of that. You don't want to get into that trap. You should also set aside tax money. This one, if you look at the invites for this, I try to talk about that a bit, about the fact that it's now a business risk for everyone. So there's what we call a tax health check. Some companies have gone that extent. They are being proactive. So they do an overall analysis of their operations, operationalizing their taxes across the various units within the company. But it's mostly for big companies. But it doesn't mean small companies or individuals can also have that. So they do all these things and like, okay, so where are the exposures for me? Where are the exposures for me? So what can I do? What are the health check? Where am I prone to have a problem? And one area I can tell you for free is if I don't have documents, the taxman will not explain, he will not want you to just use mouth to explain. He wants to see documents. And that's why if you look at the PIT file, you'll see there's an attachment for bank statements for some of those incomes. They say attach bank statements. If you attach the bank statement, if they review it and they see some interesting income, they will ask questions. But if you cannot support them with invoices, even if it's digital, albeit digital invoices, something to show that this is it, and the dates are matching and the figures are matching, then there might be a bit of a problem. So you want to find out, okay, for this period, this is what I got. What are my exposures? What are the likely implications? So you just do that kind of analysis, and it can be quite helpful in future, so that you don't get shocks if there are marginal additional assessments to the period being audited if you are picked for audits. You should also seek professional advice because tax is actually technical to some extent. So you need to know someone that knows the tax laws and can be of help to you. And then you should also make sure you separate your business income from your personal income. Very important. Don't go and put your business profits into your personal account. The set if it's a fraction for your own personal salary as maybe you're trying to pay yourself. So that one you will have declared it that from the business, this is my salary as its way. So you're putting down your personal income to be declared as your personal income tax declaration, which is quite different from your business income. So that's the bit we should know. Yeah. So what else? I think that's the bits I would just want to talk about. And that's the wrap. That's the end of my presentation. Thank you everyone for listening.
Thank you so much, sir. And I enjoyed this. It's been very insightful. Thank you very much. If you had a great time, just drop an emoji or drop a message in the chat box. Thank you very much. So we are going to run through questions now. If you have any questions for Mr. Oladimeji, you can just ask, and then we'll go back to our Mentimeter again to do a quick checkup to see what we are doing. So I'm going to drop the link again for those that don't have it in the chat box. I've dropped it in the chat box, and we'll just go through again to see where we are. So while we are preparing our questions, you can just go to the next slide, and then so it says rank the tax obligations you find most challenging. So which one do you find most challenging from this? Registration, filing annual returns, VAT compliance, withholding tax, declaring national income? You can just respond. Wow, that didn't take long.
Let me see.
Withholding
Let me
tax
see.
and the national income.
Okay, wow. So it's indeed more than a global village. That's where the money have got all of you. Got you guys. Okay,
All
so
right. You want to speak, sir?
okay, let me just say one or two things. I mean, so for the withholding, like I explained, before the new Nigerian Tax Act, what we see is that we always see that withholding as the final tax for a non-resident. Let me turn on my video. for a non-resident, you know. So what that means is we don't know the non-resident guy, but he's doing business in Nigeria. So we hold the Nigerian guy as the agent on behalf of the government for them to say, okay, you are the one that will do this on behalf of them. So withholding itself is not, like I mentioned, it's not a tax, so it's just an advance payment of that tax of company income tax. So I don't want us to get complicated now. It's much easier now than it used to be, and then it's to your credits. Now the international leg, it's just a bit shaky because of the way technology has infused. And the way the world is going now, we are moving from not just the payment of taxes to what we call effective tax rates. That means a portion of your taxes to your total income is like a percentage amount. So the lower it is, the better for you. It's more of a tax saving for you. But if most of your income is gotten from abroad, if you're in Nigeria, for instance, or if you're in any other country, but you get your income offshore, then the responsibility or the obligation is on you to declare those incomes and then pay the appropriate foreign income taxes on those payments. You know, so it's just the right thing to do, but the modalities has to still be clearer because there's still a bit of non-clarity on that. So that just are just my bits for now. Yeah.
Oh, okay. Thank you so much. Thank you so much, sir. So we'll move to the next slide. What's your current method for tracking income and expenses? So this you have to just fill in by yourself. You know, he has shared a bit about this. Our speaker shared a bit about this. Okay, bookkeeping. That's one person's answer. You can just provide your answer so we'll see it here together. Make it easy for us. Just one person answering. He said, okay. So bookkeeping is the answer. We'll move to the next slide so we don't keep everyone waiting. All right. Which of these compliance steps have you already taken? Registered for a tax ID, opened a business bank account, filed annual returns, set aside money for taxes, none yet. Okay. So, all right. Mr. Oladimeji, are you seeing this?
Yeah, I see this, and we just hope the African countries, we can speak about Nigeria, they really genuinely make it easy for taxpayers. I see a lot of change. At least a couple of people have called me that they've gone to the tax office, and I'm talking about within the last 6 months, and they say that the front desk guys are friendly than before. They don't do the touting thing that used to happen before. Anything for the boys and all that. They're quite friendlier now. They are younger and they are quite tech savvy, which is a good one. So I'm hoping that that will actually translate to encouraging people to do the right thing, and there's a bit of transparency. So the future is bright for that. Okay, it's evening out again. Set aside money for taxes. To be frank, even me, the amount I get, I just have it in mind, being proactive. You know, and based on the kind of work I do, it's not as if I actually set aside that amount for that, but I try. You know, so but it's understandable. You know, the way the world works, when you're proactive, it helps a lot. Planning and being proactive. So it saves you a lot of, it's like a kind of insurance. So it's a good thing that we see these days, especially when it comes to corporates. So I feel that it's something that individuals and business people can also employ. You know, just a portion, a fraction of it. So that when they come up for whatever reason, you know they are covered, you know. So I say that most people have opened a business account, which is the first step. I hope it's not because they forced us. And when they were saying that they will align your name to your bank statement, everybody's now scared. I hope that's not why. I hope it's genuinely because, you know, just on a lighter mode. But I mean, overall, I think it's quite impressive. It's quite impressive. I mean, I'm quite shocked about the set aside money. That's the one that impresses me the most. I mean, I find that interesting. Yeah.
Yeah. Thank you. So we'll move to the next slide now. So this is the last question. One word to describe how you feel about taxes after today's session. Just one word. How do you feel about taxes now? Ready. Like that. Ready. And we still have people who are educative, informative, interesting. Angry with the government. Why? Okay. Thank you so much, everyone. It's been an insightful time. Okay. So do we have any questions? Any questions before we wrap up the session? Do we have any questions? If we don't have questions, means that everything that was said, we understand completely, and you are ready for the tax guys. Okay. So I want us to appreciate our speaker for today. Just an emoji would do. Thank you very much, sir, for taking time out to share with us.
Thanks so much.
You
Thanks so much.
You have prepared us for.
I made. I'll just save all these emojis and now put it in a kind of frame.
Yes.
Thank you, guys. Thank you so much. Thank you.
Thank you very much. Right. Yes, sir. So we'll reach out. We'll send an email with the meeting slides later on.
That's fine.
Thank you very much. All right. Let's have a great day ahead and enjoy our weekend. Bye, everyone.
Yeah, bye, guys. Bye, everyone. All right.
Bye.
Enjoy.